This is the Analysis in Change with Nathan Williams and Neil Kieran.
Welcome to Analysis in Chains by CryptoNews.com, your daily source of all things crypto. Hi, Neil. How's everything going?
Good, Nathan. Good. Things are a bit more positive in the markets. I see people are getting excited, maybe too excited, but things are good.
It's hot here in Berlin. We've got a bit of a heat wave, and maybe the heat wave is making people all excited to buy some crypto.
Yeah.
Crypto, the market is hot. I don't know. Does that scare?
Yeah. We'll see. Yeah. I don't think they say that on Bloomberg or CNBC, you know. I don't think they've made that correlation yet, but you never know.
Well, I'm excited. It looks like the market's picking back up. And for anyone who's got a startup or who's trying to get their blockchain project off the ground, any increase in the Bitcoin price is a positive sign.
Yeah, and I think too many people probably think this is it. We're going to go straight to 50,000 or something. Just one way is up, and I think people still need to be cautious because remember this is super volatile stuff that we're looking at. If you have a long-term view of cryptocurrency in general, you could argue prices are still low and the only way is up. So if you want to buy now, but don't think it will not drop down. It's still very, very volatile, and I think that people are kind of getting ahead of themselves lately because there's a lot of ETF rumors going around, and everyone is starting to think, okay, this is it. Once an ETF is approved, institutional investors will come in, and then that's it. Bitcoin and other crypto is going to the moon. But people need to be cautious because an ETF
Remind me what ETF stands for again, Neil. Forgive me. I know it's like the index fund type thing, but what exactly do the letters stand for?
So it's an exchange traded fund, and
that's what.
And the thing about an ETF is that I could, instead of buying stocks on the stock market, I could buy an ETF, which represents. It sounds like an index, a mixture of different types of funds, different percentage of, say, maybe if I had a tech ETF, you could say 20% of it is Facebook, 20% is Google, 10% is Netflix, etc., etc. And what people are trying to have created is ETF related to blockchain or related to Bitcoin, more the cryptocurrencies. So you could have 20% Bitcoin, 20% Ethereum, etc., etc. And it could mean a lot more direct exposure to cryptocurrencies because at the moment we have future options is a way of betting on cryptocurrency without actually owning the cryptocurrency. Whereas with an ETF, it would mean that institutional investors are actually owning the cryptocurrency, depending on how it's all set up, in terms of infrastructure. But there will be a lot more ownership of institutional money in crypto. The thing is, it's a big jump for the SEC or other regulatory bodies to really embrace a crypto ETF. I'm sure there's a lot of checks and balances that need to be put in place to make sure that there's no fraud. But I think people are getting a lot more optimistic about it finally happening. For sure, it could happen in the next 5 years. But I think people maybe are getting ahead of themselves, thinking it'll happen in the next 6 months. And even if it did happen, it doesn't mean we'll have a big rush of institutional money coming in. We know a lot of institutional banks like Goldman Sachs, Citibank, JP Morgan now have offices set up just for crypto. They're doing a lot of research. They really are on top of the game. They understand the space very, very well from a lot of the interviews I've been watching recently. But the thing is that they can't rush in with their millions and millions of dollars because it caused such a huge pump and then dump, and then the markets become very unstable because there's just not enough liquidity in the markets. They are.
You think they'd like that pump?
Yeah, in a way, you could say, "Hey,
it's like look at it, look at our money. It doubled overnight. Oh, look, 10x, 20x, 100x."
Like in a way, you do have a point. But if we think of the bigger picture, so just say you are a billionaire and you decide, okay, I have $100 million. I have nothing to do with it. I'm just going to put $100 million in Bitcoin. If you were to do that immediately, what would happen is that because there's not enough we'll say sellers of Bitcoin, you would notice that you might buy $5 million worth at $8,000, but the next 5 million would be worth $9,000 in Bitcoin, and because you cannot buy $100 million worth of Bitcoin at exactly $8,000 per Bitcoin because there's just not enough, say, sellers in the market. So obviously that would cause the price to shoot up very, very quickly. If that were to happen, people will start selling like crazy. But then if you're thinking, okay, I need to get out because everyone is selling and I need to take back out that $100 million, there would not be enough sellers of Bitcoin because, again, it's not very, very liquid. Therefore, you will probably end up selling way below what you initially bought at. Institutional investors need a lot more liquidity, a lot more buyers and sellers. So that means that if they have $100 million and they want to buy at $8,000 worth of Bitcoin, they can buy $100 million worth of Bitcoin at $8,000 without worrying about massive price fluctuations. So this would be the ideal marketplace for Citibank, Goldman Sachs, and the likes. They are coming, but a lot more development needs to happen in crypto, and a lot more, say, price volume is required for them to want to enter. So I think that's what people have to realize. It's not going to happen tomorrow. Even if an ETF is approved, it's going to take a lot more liquidity, and the market's going to have to increase in size before they really get serious.
I guess so. I mean, if there's a lot in there. There's a lot of moving parts, right? I mean, my first thought is, yeah, the SEC tends to be pretty cautious toward crypto, and but at the same time, once the big boys are starting to push for it, I think the SEC will probably be more willing to give a little, because if you got J.P. Morgan, Goldman Sachs, chomping at the bit to try start putting crypto in an ETF, then it's got a lot more weight behind it than your average mom and pop day trader with a couple of Bitcoin in their wallet, right? And
yeah, no, I totally agree. But the thing is, if they're going to push the SEC for approval, then I'm sure that they will be waiting for the right market.
It's true. But remember how the incentives work in Wall Street as well, and if you're working in Wall Street, it's not like there's a sort of one unified block of traders that have the same policy. What's going to happen is someone's going to take a risk. Someone's going to pump $500,000 into Bitcoin. That's going to cause the price to shoot up. They're going to do well. Other people will see, hey, they're doing it. They're going to get a bonus, and so everyone sort of follows in onto them because they don't want to miss out. And that's we've seen that happen over and over again throughout stock market history. And even the whole Big Short thing with with people piling into CDOs, collateralized debt obligations in the housing market. People kept doing it even though it was crazy because everyone just sort of didn't want to miss out. And if you've got an incentive to gamble more, then you're going to take more and more bets because otherwise your department's going to be the one underperforming until the whole thing crashes. I think in a way, Wall Street is a bit like lemmings running off a cliff. Some people might see it coming, but they tend to run off together.
Yeah, well, the thing is, what's happening now in markets around the world, there's a lot of uncertainty. And if you look at, say, a trade war, whatever you want to call it, it's people are looking for alternatives, and there's also risk of a U.S. recession in 2020. That's more of a natural recession because there comes a point when interest rates go so high, it starts to impact growth of companies. So we are going towards that type of road, and institutional investors kind of need that other plan. Yes, they're probably going to go off they will probably all go off the cliff together during that period when the next recession comes along, but they need to have those other exposures and other products out there that can have them ready, because I wouldn't be surprised when the stock market's going down, you're going to see crypto possibly remain stable. And
Interesting.
so I wouldn't be surprised if they're trying to get ready for that. And again, that's 2 years away, and that's why again we're
Yeah.
kind of alerting to the fact, okay, things are going up today in 2018 in July, but you have to think of the bigger picture here. It's not going to go. It may not go to 20k, 50k in the next 6 months. You have to look at the bigger picture, and the bigger picture is that, okay, financial markets, they're a bit turbulent now. Bigger picture is 2020 could go south, and maybe some of these institutional players need to have that sort of that other exposure that can help stabilize their portfolios.
Well, this is an interesting point you brought up that I hadn't really considered before, Neil, which is everyone's been sort of going back and forth as to whether Bitcoin is a store of value. Is it the new gold? Is it going to be recession proof? Does it go up when the stock market goes down? And then when Bitcoin crashed along with the rest of the stock market earlier this year, then we said, okay, maybe not. But this was before institutional money was in. And it may be that retail investors or even crypto whales behave differently than than institutional money, right? Because institutional money tends to tends to act in large scales. It tends to go in waves. And some funds have specific points where they would buy or when they would sell it. It's more algorithmic, and so it may very well be that that as institutions get involved with the crypto scene, that we will see this pattern that people have been predicting, but we haven't experienced.
Yeah,
I don't know.
Yeah, but I think that the upcoming recession, because at the end of the day, it's impossible to live in a world when you have like financial markets in Western countries. It's impossible for them to be recession proof. So it has to come, and when it does come, I think you're right. Like watching the correlations between crypto and financial markets will be very, very interesting, and those financial markets will be impacted by interest rates. And again, it's going to be a different system of how that monetary policy works will be the cause of that recession. Whereas in crypto, you don't have a central monetary policy. You're not worrying about geographic issues. And so this would be very, very interesting if it does end up being stable. It goes to show, well, with crypto, you don't have international exposures, you're not taking international risks, and that's possibly could be why you need to have this exposure, because if USA has a bad financial period, crypto could be good. But then we could have times when US or other financial markets are doing very, very well. Crypto could go bad because people may prefer the risks in traditional markets as opposed to crypto. So we're going to see now, I think in the next 2 years, some correlations that will be very, very interesting.
So your advice to me, financially speaking, no, I'm just kidding. So you don't have any financial advice because you're not a financial advisor, but you're saying you're cautiously optimistic.
Yes, I am cautiously optimistic, more because there's just a sentiment and like some assumptions about why now's a good time to buy crypto, and people think it's just because of ETFs and stuff like this. But people still need to look at the bigger picture and realize that ETF will not be the sole reason why crypto will go up. It's all about the community. It's all about all of the tech development. All about these investors coming in and supporting different programs like that. That's the bigger picture. And once that's healthy, buying into crypto will always be a safe bet. But if you're just thinking, ETF, now's the time to buy because of ETF, I think you're ahead of yourself, and you have to look at the fundamentals of crypto as opposed to the speculative reasons for buying it.
Makes sense. I mean, if you're taking the really quite long view, you still have a fixed number of Bitcoins. 21 million maximum, plus a good chunk of them frozen or lost forever among 7-8 billion people in the world. Increasingly, more and more people are getting into crypto. So, over the long term, I could imagine it must necessarily go up, but that's over the very the long view, and crypto tends to work in periods of days or weeks, not in the periods of decades. But so it maybe, I don't know, maybe it would be worth it to buy a Bitcoin for your new baby there, Neil, and maybe by the time he's 20, that'll be his college fund.
Yeah, actually, that's not bad advice. Yeah. Okay. Well, I'll have to review my retirement policy then, and my kid investment policy.
Crypto-tirement. All right, Neil, you have a good week. We'll talk to you soon.